Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So last video I have completed the theory part of the topic depreciation. In this video I am going to solve the short questions and MCQs on the topic depreciation. So before watching this video, first of all you must be acquainted about the meaning of the term depreciation. I have explained the meaning, the reason for providing depreciation, and what are the methods of calculating depreciation, and what are the journal entries to be passed for providing depreciation. All these things I have already explained in the last video. So if you have not watched that video, I suggest you first you watch the theory video, then only you come to the problems. Otherwise you cannot be able to understand the concept. And theory is very important, because in examination short theory questions will be asked on this topic of depreciation. Now, before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. So last line of the description, you'll find the link. Get a printout and keep it ready before start watching the problem. Take a screenshot of the solutions of few problems which I have written on the board. Then I'll explain each and every problem in detail. Come on. I'm starting the first problem, short questions and MCQs. Very first one. What are the causes of depreciation? In the last video, I have explained you why this depreciation will be provided. What are the causes? What are the reasons? So I've explained so many reasons are there. The important reasons are physical reasons, economic factors, or depletion or amortization. So many factors are there. Wear and tear. The first cause of depreciation is wear and tear. By using a non-current asset, its value will get decreased. That is usage. On account of usage, the value decreases. That is the first cause. That is wear and tear. Second, erosion, rust, rot, or decay. Because the assets are exposed to the nature. So some of the assets the value of the asset may get decreased on account of evaporation, on account of rust, decay, etc. This is also one of the reason of depreciation. Obsolescence, outdated. Due to advancement in the technology, some of the non-current assets may become outdated. The value will come down. Next one is inadequacy. As the business grows, some of the assets may not be compatible for the usage in the business. Some of the assets will become outdated, or some of the assets will not be suitable for usage. For example, we have purchased a small vehicle when our business was very small. But as the business grows, the small vehicle is not sufficient. We have to replace with a bigger one. So due to inadequacy, the value will come down. Next, lapse of time. Some of the assets are there whose value will get decreased according to the time basis. For example, in case of leases, when an asset is taken on lease, the lease is taken for a time period. So as the time passes, the value of the asset will get decreased. So these are the causes. Next one, second one. What is amortization? Amortization means writing off an asset, an intangible asset. When we write off the value of an intangible asset, that is called amortization. It means gradually writing off the initial cost of an intangible asset over a period of time. Example, patent. Patent is an intangible asset. We amortize the value of patent over a period of time. That is called amortization. Simply we can say, for tangible asset we use the word depreciation. For intangible asset we use the word amortization. Both means writing off the cost of the asset. Next comes on which asset depreciation is provided. Depreciation is not provided on all the assets. The depreciation will be provided only on non-current assets, whether it is tangible or intangible. Depreciation provided on all non-current assets except land. Remember the point, land is a non-depreciable asset. The value of the land will not decrease by using the land. So except land, all other assets, non-current assets, depreciation is provided. If it is land and building or only building, then depreciation will be there. Then depletion. What is depletion? The question is, what is depletion? Depletion, the consumption of an asset of a wasting nature. Some of the assets are in wasting nature. That means when we extract it, when we use the asset, the life of the asset will come down. The value of the asset will come down. The asset will be of wasting nature. Example is the natural resources which are extracted from the earth, like minerals, oil, coal, stones, etc. These are the natural resources which are underneath the earth, which are under the ground. So when we extract these natural resources, the value will come down. So this is called depletion. Next one is fifth problem. There's a problem. Mike purchased a motor vehicle at a cost of 25,000. The cost of the asset, vehicle, 25,000. He wants to use the straight line method at 20%. Calculate the annual depreciation. Straight line method. In this method, the annual depreciation will remain same. So what is the fixed rate? 20%. So calculate 25,000 is the cost into 20 by 100. You will get 5,000 rupees is the $5,000 is the annual depreciation. Next, sixth one. Which account is debited and which account is credited for the annual charge of depreciation? What is the entry to be passed? Which account debited and which account credited for providing the annual depreciation? In the last video, I have explained in detail all the entries. So the entry for providing annual depreciation is income statement debit, provision for depreciation credit. That's it. So income statement debit, provision for depreciation credit. Next comes, what is meant by the term carrying value? Problem number 7. Carrying value means the total cost price of the asset minus total depreciation to date. For example, if you have purchased a machine for rupees 1 lakh, for $1 lakh, 5 years back. So 5 years back, the cost of the machine is 1 lakh. And during the 5-year period, we have provided depreciation 30,000. So last 5 years, total depreciation 30,000. So 1 lakh rupees is the cost price, 30,000 is the total depreciation. Deduct 1 lakh minus 30,000, you will get 70,000. This 70,000 is called carrying value. That means the value of the asset after deducting all depreciation to date. So here I have written, it is how much the non-current asset is worth after depreciation has been taken off. What is the value of the asset remaining after deducting the total depreciation? That is called carrying value. The formula is cost price of the asset minus total depreciation to date. That's it. Next, eighth one. What are the two concepts that are applied while calculating depreciation? The two accounting concepts which are followed by for calculating depreciation are prudence concept and consistency concept. Prudence concept says we should provide all the expected losses. If we do not provide all the expenses, losses and expenses, then what will happen? The profit will be overstated. The prudence concept says the profit and assets should not be overstated. So if we do not provide depreciation, the profit will be overstated, the assets will be overstated. Prudence concept says it should not be overstated. That's why we have to provide for depreciation. By providing depreciation, the value of the asset will come down and the profit will also come down. So the two accounting concepts which are applied for calculating depreciation are prudence concept and consistency concept. Next, ninth question. Explain the main difference between straight line method and reducing balance method. The two important methods of calculating depreciation are straight line method and reducing balance method, SLM and RBM. What is the main difference? In SLM method, straight line method, the annual amount of depreciation will remain constant year after year. Every year the amount of depreciation remain same. In RBM, reducing balance method, the amount of depreciation will decrease year after year. Example, first year depreciation was 10,000, second year it will fall down to 9,000, third year it will again fall down to 8,000. So every successive year the amount of depreciation will decrease. That is the main difference. Next, 10th question. Define the term depreciation. Depreciation is the decrease in the value of non-current asset due to wear and tear, lapse of time, obsolescence, inadequacy, or decay, rust, etc. So, decrease in the value of non-current asset over a period of time is called depreciation. Here, depreciation is where a non-current asset loses its value over a period of time. When the non-current asset loses its value over a period of time, that is called depreciation. Next, 11th question. Here it is MCQ. So, four answers are given, options are given A, B, C, D. Out of these four options, one option is correct. So, we'll solve it. A vehicle was purchased for $20,000 in Jan 2015. And 2 years later, the vehicle has a carrying value of 10,000. So actually purchased for 20,000. After using for 2 years, its value has come down to 10,000. That means depreciation provided in 2 years is 10,000. Depreciation was calculated using straight line method. In straight line method, every year depreciation will remain same. First year, second year, third year, every year the amount depreciation remains same. So here for 2 years depreciation 10,000. So 1 year how much? 10,000 divided by 2, 5,000. So first year 5,000, second year 5,000. Now it is asking you what annual depreciation rate has been used. What is the rate of depreciation which is used? Here, cost of the vehicle 20,000, carrying value after 2 years 10,000. It is given in the problem. The carrying value is 10,000. Therefore, depreciation for 2 years is 10,000. The depreciation method is SLM. SLM means every year the depreciation remains same. So for 2 years, how much is the depreciation? 10,000. So for 1 year, 10,000 divided by 2, 5,000. So every year depreciation is 5,000. Now it is asking you what is the rate of depreciation. Rate of depreciation, we have the formula annual depreciation divided by cost price of the asset into 100. Annual depreciation 5,000. Cost price of the asset 20,000 into 100. You will get 25%. So 25% is the rate of depreciation. So the answer is B. B is the answer, 25%. That's it. 11th completed. 12th. 12th problem. Paul Williams improves the layout of his shop by spending 12,000 on new fixtures and fitting on 1st April 2015. Paul Williams is a sole trader. He is making some improvement in his layout by spending on furniture and fixtures and fittings. The $12,000 he has spent on fixtures and fittings on 1st April 2015. Remember, fixtures and fittings are non-current asset on which depreciation will be allowed. He decides to depreciate using the reducing balance method by 20% per annum. So Paul Williams has decided RBM will be followed at 20%. Depreciation of 2,400 is included in the income statement for the year ended 31st March 2016. So actually he has spent on 1st April 2015. 1 year completed on 31st March 2016. So 20% of 12,000. 2,400 already depreciation provided for the year ended 31st March 2016. Which amount will be included for depreciation of motor vehicle in the income statement for the year 31st March 2017? Now current period is 2017. How much depreciation? According to RBM, reducing balance method. Amount spent on fixtures and fitting on 1st April 2015, 12,000. From this, deduct depreciation for the year ended 31st March 2016, 2,400 given in the problem. So 12,000 minus 2,400, 9,600 is the carrying value. On this carrying value, depreciation will be provided at the rate of 20% given in the problem. So here, depreciation for the year ended 31st March 2017, as per RBM, reducing balance method, 9,600 into 20 by 100, 1,920. This is the depreciation for the year ended 31st March 2017. So your answer is A. A answer, $1,920. That's it. Now see the 13th one. A sole trader has omitted depreciation from his financial statements. What are the effects on the statement of financial position? See, the sole trader has not provided depreciation, not calculated depreciation in financial statements. What will be the effect? So 4 options are given on the non-current asset and on the profit for the year. Remember, when depreciation is not provided, it will affect the profit and also it will affect the non-current assets. Both will be affected. So what is the effect on profit? The profit will be overstated because we have not charged depreciation. So profit will be more. Similarly, when we have not deducted depreciation, the non-current asset will also be more. So the 2 effects are, when we do not provide depreciation, the profit will be overstated and the non-current assets will also be overstated. So answer is A. The answer is A. Non-current asset overstated, profit for the year overstated. That's it. This is the 13th one. I have written here answer A. When depreciation is omitted from the financial statement, profit for the year overstated, non-current asset overstated. Next, 14th. An office machine cost $8,500 and is estimated to have a useful life of 4 years. Its scrap value at the end of this time is estimated to be 1,000. What is the annual charge of depreciation using straight line method? We are given the cost of the asset. We are given the disposal value or scrap value, and we are given the estimated useful life. And method of depreciation is straight line method, SLM. So according to SLM, the annual depreciation is cost minus scrap divided by estimated useful life. Cost of the machine 8,500, residual value or scrap value 1,000, estimated useful life 4 years. The annual depth as per straight line method is cost minus residual value divided by estimated. 8,500 minus 1,000 divided by 4. The answer is 1875. $1,875. This is the annual depreciation according to SLM. That's it. Now 15th. Paul purchased a motor vehicle for $15,000. He estimated that it would be used for 5 years and then it will be sold for 2,000. So purchased for 15,000 and after using for 5 years, after 5 years he can be able to sell it at $2,000. Paul decided to spread the depreciation of the motor vehicle equally over its working life at the rate of 20% per annum. What is the accumulated depreciation at the end of 2 years? Accumulated means total. Total depreciation of first year as well as second year, 2 years. It is asking you to calculate total depreciation after 2 years. First of all, the cost of the vehicle is 15,000. The residual value is 2,000. That means we will get back 2,000 after 5 years. And amount to be written off over the life of the asset is 15,000 minus 2,000, 13,000. The actual amount which should be spread over the life of the asset is 13,000. Right? So what is the annual depreciation? Per annum depreciation is equal to 20% of 13,000. 20% of 13,000, it comes to 2,600. So for 1 year, 2,600. So first year 2,600, second year 2,600. If you add up 2,600 plus 2,600, 5,200. So 5,200 is the total depreciation at the end of second year. It is asking you accumulated depreciation at the end of 2 years. At the end of 2 years, accumulated depreciation 5,200. So answer is B. The answer is B, $5,200. That's it. So 15 problems I've explained in this video. Inshallah, in the next video, I'll continue the explanation of short questions and MCQs. So keep watching to enhance the knowledge and to get a good command on the subject of, on the topic of depreciation.